This is Make Dollars and Cents. Welcome back to another video. This week we're going to be doing a market update. Last time we spoke, we saw that the stock market was being ravaged by the coronavirus, and that forced, if we click over to the chart, markets to drop over 35% in a pretty short matter of time. They peaked in February, looks like late February on the 19th, and we saw the most recent bottom here on March 20th. That's a very fast 35% drop. It's the fastest 35% drop ever in the stock market's history. And it continues to get crazier because in the last 2-3 weeks, we've seen one of the fastest rebounds. A V bottom is what we call it. It's where you drop quickly and you return quickly. And like I said, about 2 weeks. And I think that if we click over to the news, that I think this has to do with a change in sentiment. Now we're seeing people kind of be optimistic about the Federal Reserve bailing out bankrupt companies. Coronavirus may be slowing its spread. So with all this new optimism, we're seeing that people are becoming less fearful and more greedy. And you can see that here on the CNN Fear and Greed Index. 1 month ago, there was extreme fear. And this index just has a few indicators that it compiles together to average out and come up with a final number of how fearful or greedy the market is in total. So you have momentum, there's fear there, and at the bottom it shows you how it has oscillated over time. And so you can see that times of extreme fear, like we were in last month, are here. So at the end of 2018 and just now with this coronavirus pandemic. So the Fear and Greed Index slaps together all of these indicators and comes up with a final number here. So right now we're kind of in the middle. We're erring on the side of fear, but as you can see, there's been a lot of upward momentum in the marketplace. And it's kind of interesting because we see that the stock market has increased drastically over the past 2 weeks, but if we go over to more safe assets like bonds, TLT is a ticker for long-term treasury bond ETF, they've been stable. So they haven't sold off very heavily, which means that people aren't, selling their bonds and moving into stocks. If we go to gold, it's higher than it was last time we checked. So people aren't selling off their gold interest in GLD, this ETF that tracks gold. So it's an interesting dynamic to see these assets kind of move in tandem. Usually you don't see all these assets moving in the same direction at the same time. So it could be a sign that people are still piling into gold and bonds, and that maybe the stock market is going to be making another leg down. But we'll see. If we click over here into Investopedia, this could be a bear market rally. And a bear market rally is just a sharp increase in price amid a longer term bear market. So technically, we are no longer in a bear market because from the highs, we are now only 17% approximately off the highs. Like I said before, we were down 35%. A bear market is 20%. So currently, we're not technically in a bear market anymore. We've kind of returned to a bull market. However, if we continue to make another leg down here, we're very close to returning into bear market territory. And now we could chop around and consolidate until there's some definitive positive news, the economy starts opening up, etc. I think that this is an interesting time to be investing, actually, because there's really no telling where we go from here. This coronavirus could potentially start to become contained and die off, or there could be a second flaring if we go back to work too early. So it's really difficult to tell. And we want to be careful, we want to be cautious, but we also don't want to crush the economy into oblivion, right? It's only time will tell here. I say continue investing. I continue to contribute every single week, every time I get paid to invest in the market. I buy broad index funds. So that would be something like VTI. VTI is Vanguard's total stock market index fund. It just tracks the entire stock market. You're going to be totally diversified, and it's a great investment for the long haul. If you're looking to hold something for the next 20, 30, 40 years, $100 every week into something like this, and it's almost foolproof. There's a risk of loss in any type of investment, but if you're investing for the super long haul, I think that this is the way to go. Anyway, that's it for today. Hope you enjoyed this market update. I urge you to check out the website at makedollarsandcents.com for more written content if you're into that sort of thing. And thanks for watching, and I'll talk to you soon. Bye.